right, good morning, everyone. I want to welcome you to the Miami-Dade Chamber of Commerce TA workshop on fundraising for early stage companies. We're going to get started in a few moments. Going to have our attendees come in online. For those that are on Facebook, I strongly encourage you to click the link so that you can join the conversation. We take questions and chat from those that are on the webinar as attendees. Those that are there, feel free to use the chat to say good morning and hello to everyone. And we're going to get started in just a few moments. We have a great guest today, a topic that we haven't spoken about at the Chamber in quite a while, and that is fundraising for early stage companies. So I'm really excited to have one of our newer members, Young America Capital, come in, which is an investment banking broker company. And Peter Formanek has quite a bit of experience, over 30 years experience in the field. So we're excited about today's conversation. So give us a few moments while we get everyone in here. All right. All right. We got our participants coming in. That's good to hear. For those on Facebook, make sure you share. You click the link to join in, and we're going to get started in 2 minutes. All right. All right, everyone. I want to welcome everyone again, Miami-Dade Chamber of Commerce. We're going to get started. First, we're going to bring in our president, Mr. Eric Knowles of the Miami-Dade Chamber of Commerce, give greetings to our audience and for those that are here today for our regularly scheduled TA workshops to help businesses understand how to continue to grow and develop. We got a very special guest today, and I'm excited to have this conversation. Eric, you have the floor.
Well, good morning, and thank you all for joining us. And Matthew, thank you as always for putting these very informative workshops and technical assistance events that we have. I'm excited about our guest this morning because it's all about the money. And, you know, we're wondering, we always talk about what the challenges are for startup businesses, and raising capital usually is at the top. And so this morning we have the pleasure of having Peter Formanek. He's the CEO of his organization, and Peter has 30 years of experience. And I'm reading his bio, so bear with me for a moment. 30 years of experience advising fund managers, family offices, and companies. He has been involved in 300 plus transactions over the course of his career, and has extensive experience in the VC and PE field. And he's going to tell you what that VC means and that PE means in providing deal origination, fundraising operations, and chief operating officer, chief financial officer level expertise and guidance. So Peter has raised $2 billion of AUM over funds, and I'm letting him explain what that means. So I'm going to get out of the way and let Peter jump in and get this conversation started. How you doing, Peter?
Very good. Nice to meet you all.
And I know we're down here in sunny Miami, and you're up in New York. You told me it's getting a little cool up there now.
Yeah, fall is upon us. Yes.
And fall. Before we get started talking about fall, I grew up in Miami as well as Buffalo, and I do kind of miss that transition of the trees starting to change and that crisp air. So I know you're enjoying it, but you have the ability to come down to Miami when you need to. So having both is a great thing to be able to process, I guess I would say. So I'm going to, as I say, engage you. Can you tell folks what it is that you do?
Sure. So I run a 66-person investment bank and broker dealer. And our job, we get hired by small companies to raise capital or run a company sale or provide financial guidance to make sure that their business remains viable and healthy and survives, especially during these tough times.
Okay. So, being a broker dealer, providing money, like I said, one of the biggest challenges with businesses is capital, starting your business. So, when you say you provide that, what does that exactly mean to a lay person that doesn't know what that is?
Sure. So I would equate us similar to being a real estate broker, where we have an inventory of clients that we're trying to raise money for, and then we go out to the investor community and the lender community and show them great opportunities to invest in or lend to small companies, small businesses, and then facilitate that transaction process. So we're a marriage broker between people who need money and people who have money.
Okay, and I know you have a presentation that you're going to give, but I know when we first started in the pandemic, and we've been doing these daily Zooms with our members, and one of the things that we talked about in terms of right now being a great opportunity to buy a business, because a lot of people want to get in business, want to start a business. They may be an expert at whatever they've been doing. For instance, they may have been in a particular career for 20 or 30 years, and now they're going to transition and start being a consultant or start a business on their own based on the expertise that they have. But the fact is, probably, and you correct me if I'm wrong, probably the easiest way to start a business is to buy a business that's already exists. Perhaps the person who had started that business is deciding to retire and they want to sell that business. But at the same time, when we're talking about the pandemic, a lot of people are basically they've run their business for many years, and here they are struggling, even though the business is still viable, but they're just saying, you know what, I've had my time, I'm ready to move on and move away from this. And so to me, it's a two-pronged thing. That person who's ready to move away, who doesn't want to just give away their business or just close it down, here's an opportunity to sell that business. But then to that person who's looking for a business to start, here's an opportunity to buy a business. Can you talk about that a little bit?
For sure. Yeah. And we're very good at helping people negotiate that type of acquisition or entrance into a business as well. There's thousands of business owners who would love to get an exit but maybe don't know where to go. If they get approached by somebody who has expertise in their industry and wants to participate in the future of the business, it would be a great scenario for an incoming person to buy into the business either immediately or over time. They could work, on a reduced salary as part of an equity swap. There's a lot of different ways to get your foot into a business. and then have a eventual path to taking over the business 100% over time, which is less capital intensive than buying it right out of the gate.
Right. So I'm going to step out of the way. Like I said, I know you have a presentation, so I'm going to turn it over to you and let you go with your presentation.
Okay, thank you very much. Okay, let me see if I can bring that up. Okay, so can everybody see my screen?
Yes, it's up.
Okay, perfect. So thank you to the chamber. Thank you, Eric. Um, I run Young America Capital. We are a 66-person investment bank and broker-dealer, headquartered in New York, but with 4 people in Miami and Fort Lauderdale, people in Orlando, people all across the United States. We have closed 36 transactions over the past 24 months. So we're closing over a deal a month. So we're a high volume investment bank focused on the lowest part of the lower middle market, which is the smaller businesses that probably have between 0 revenue and 10 million of revenue is our main area of focus. We do work on a lot of companies that have more revenue than that, but we're very well suited to serve the Miami Chamber members because we focus on the smaller business owners. I'm just going to jump into my presentation here. So I wanted to talk about how to raise capital, whether it be equity or debt capital, for your business. And you know, probably prior to the pandemic, this was not as much of a priority, but a lot of people have reduced their ability to run their business because of financial underperformance. Or maybe your business is booming and you want to capitalize on the opportunity in front of you to increase the value of your business by expanding it, but you need more capital to do that.
And Peter, Peter,
yes, sir.
You just mentioned equity or debt capital. For those laypersons, I'm sure it sounds pretty, basic, but can you explain that a little bit?
Sure. So if you have a business which has a decent amount of revenue and is at least break even, it's going to be cheaper and easier for you to get a lender to your business than it would be to induce an equity investor to come into your business, because the lender is going to get repaid over time or at a future date. And so they don't have to take as long-term a relationship bet with your business as an equity investor does. However, most small businesses don't have enough of the financial metrics to induce a lender to put a big loan onto the balance sheet of your company. So you're basically going to have to be, the fallback option of that would be to bring in an equity investor. And there's all sorts of different types of equity and debt structures, and we can work with you on all of that. But the bottom line is you got to get the money from somewhere, and it's got to come onto your balance sheet either as debt or equity. I think that's about as simple as I could put it.
That's a good explanation. Thanks.
Thank you, Eric. I'm listing here briefly all the major sources of capital. And so obviously, when you're a very small business, the easiest people to get induced to invest into your business are your friends and family. And that is very common, but it only gets you a little bit down the road unless you have a very wealthy relative that really believes in your business. So then you have to turn next to high net worth and ultra high net worth investors. And those are similar to friends and family, but have a little bit more savvy when it comes to negotiating and have more money as well, which is, important. So I ranked these just by the different types of sources of capital, and I won't spend too much time on this spreadsheet, but I can email everybody, or Eric can email anybody who's interested this presentation after the webinar. Really what you want to do is you want to reach out to many different types of investors to see which one is the best fit if and when you're trying to raise capital, because you don't know where the money's going to come from, and you want to have a statistical probability of success. And so by trying all of these different categories of sources of capital, you're able to diversify your risk and maximize your probability of success. And so venture funds, everybody knows what a venture fund is. VC is venture capital and PE is private equity. What venture funds are hard to induce to invest in your business, but if and when they do, if they add a lot of value, which is one of the things they claim to be great at, it can help you propel your company forward at a more rapid rate and put you on a path to either go public or get bought out by a large strategic in your industry. But they're harder to get to participate in your investment opportunity. Family offices really are probably the sweet spot of what most CEOs of small businesses aspire to get as an investor. They're a little kinder and gentler than a venture fund, but they have a similar set of terms, maybe a little more. They have a longer hold period, and then they are also probably going to be a little bit easier on negotiating. We also like to send all of our deals to the corporate development executives at the strategics in your industry. And even if they're not, if we are not a fit for them, it's a branding exercise so that if I am running a capital raise for Eric Knowles and he wants to eventually sell to IBM, if we show him his company to IBM now, at least the corporate development executive knows who that company is, who Eric Knowles is, and then if we go back to him in 3 to 5 years, he's going to have some memory recall, and he's going to be more likely to take a good hard look at that. So this slide, I don't want to spend too much time on. I want to jump to the capital raise timeline, which is something that we use as a tool and to show everybody what the process is to raise capital. So there is a defined methodology and process that we use, and it's outlined here. And what you want to do is you want to run a very organized and well-timed process so that all of the investors are roughly in the same time period during this process. Because if you have people that are on different timelines, then it's basically what we call herding cats, which we don't want to do. We want to have all of the investors at the end of the due diligence process around the same time, so we can compare apples to apples if and when we get 3 to 5 or 7 interested parties. We want to be able to educate our clients and help them to evaluate what's the best offer. But if the offers don't all come at the same time, then it's hard to evaluate that because you're going to have to negotiate on a one-on-one basis. So this timeline shows you that the typical time period is about 18 weeks. And it's pretty basic common sense, but it's a process which we use to try to expedite the efficiency of the process. Matt, did you have a question?
Yeah, so basically, you're saying that you're planning for each of these stages before you actually start, and then you kind of invest in all your time, or majority of your time, in each of those stages. So it's a lot of planning involved in that, is what it looks like.
It is, yeah. We've done it. We've closed hundreds of transactions. We've grown to 66 people over the past 11 years. So we've closed, just in the past 2 years, we've closed 36 deals. But so we're very well trained in our process, and we try to replicate that because it's been proven to be successful. And you don't want to cram it into too short a time frame, because then it'll look like we're desperate. We want to have a well-managed process that occurs efficiently over an 18-week period of time. It could creep. Some deals creep out to about 6 months. It really depends on how complex the company is and how interested the buyers are. but we want to get everybody into a final evaluation of the investment opportunity around the same time, so we can best advise our client as to which counterparty to go into exclusivity with, because that's everybody who wants to buy the company or invest in the company is eventually going to want to have an exclusivity period, which means they are the only investor or lender that is allowed to do due diligence and consummate a transaction for typically a 60-day to 90-day period of time.
And so when looking at small business, a lot of our members and those that are watching are small business owners who are in the middle of business and may need some capital in the near future or planning for that future. And I'm looking at these steps you have laid out, and it's really good to see each of those steps. I'm wondering, like, how does that translate to a small business owner? On
Sure.
one hand, I can see them reaching out to a company like yourself to help them prepare to get this stuff together. But if they were to do this step by step, because even the first thing, the pitch deck, we just recently had before COVID hit, we're going to have a business and leaders luncheon where people are pitching their business. And there's a lot involved in putting that pitch deck together. So that right there is a big step, number one. But then it's a more technical, preparing the NDA, commencing the calls and the marketing, all those things. Like for a small business owner, how would you say they should go about allocating the time and getting the right resources together to get a good pitch deck together, or preparing the NDAs and things of that nature?
Sure. So each one of these steps, we can certainly supply to a client sample pitch decks and sample executive summaries in Word and PowerPoint, and then they could what they typically do is they give that to their controller or their bookkeeper, and or they do it themselves, and they put together something representative of their company that follows a similar format and layout of the deck we supply. So that's a standard thing. If you can outsource that, we can get those pitch decks and executive summaries done by our staff. That's a very common task that we're asked to do by our clients. And then we can also outsource it to a graphic artist or another service provider if the client prefers to do that. With respect to the NDA, we always like to get the client's attorney involved and get the NDA that the client's attorney has blessed, so that everybody's happy that we're adhering to the legal protocol that the client's attorney is comfortable with. And then with respect to commencing the email marketing and the telephone marketing, that's just us, me and my team, rolling up our sleeves and doing the hard work that we're responsible to do in order to make this a successful process. So,
thank you.
Yeah. So let me just go into the next topic, which is research resources. And the reason why this is very important is because without the right information, you're not going to be able to run a good process. So we subscribe to a lot of these software subscriptions. We spend over $100,000 a year in software subscriptions. Our two main software products that we rely on are PitchBook and Capital IQ, which is the S&P global product. And those are high-end research products. So if you're in the building products industry, we can using these softwares and other software, we can get a lot of detailed information on your industry niche, who the competitors are, who have invested in those competitors, because what we want to do is we want to understand that ecosystem really well so that we can communicate with all of the investors that are already educated in your industry. So that's one thing we like to do. We also go to all the people who are focused on building products more generally, even if they don't have an investment in your direct competitor. And we're able to get all of that data from these types of services. I will point out one thing. If you guys don't have a big budget and you're not really ready to engage an investment bank, and I think one of the better known investment banks for the smallest part of the lower middle market, but there are a number of great investment banks right in Miami, right in Fort Lauderdale, and they are, if you really want to have somebody that's, referred to you by a lawyer or referred to you by a friend, you can reach out and you can find somebody like us. It doesn't have to be us, but I would say use somebody that's got the skills and the cumulative life experience to run this type of process, because it's not the type of process you can efficiently do on your own. But you can get a subscription to Crunchbase Pro for only $350, and that will teach you a lot about your competition. It will make you a more intelligent CEO or president of your company, even if you're not ready to raise equity or debt capital, and or you don't want to hire an investment bank that has access to these larger software subscriptions. ZoomInfo, I will just point out briefly, ZoomInfo is a great software. We love the software, and it gives us very accurate email and telephone numbers for CEOs, corporate development executives, could be head of sales and marketing, could be a purchasing manager. Let's say I'm running a umbrella manufacturing company in Coral Gables, and I want to communicate with other people in the industry that might buy my umbrellas. ZoomInfo is a very cost-efficient way for you to get the purchasing manager's email address and telephone number. So then it'll help your sales process. So that is not directly related to what I'm talking about, but that might help your business to maximize its revenue into 2020 and 2021. I'm just going to switch to the next topic here, which are what types of attributes that are you looking for when you want to bring in a new lender or a new investor? And it's really, in our opinion, three things. What is their network, and how is that network going to help me as the CEO of my company to grow my company and strengthen my company? What is their connectivity within my industry and within the investment community? Because if they don't have a lot of great contacts, then they're no better off than me just taking additional friends and family money from my business. And the third thing is what tools are they bringing to the table, whether it be these software subscriptions or whether it be having been a operating partner at a company in your industry. That would be a great reason to bring somebody in as an investor if they already have experience in your industry. So we always, as part of our process of helping our client evaluate who has the best fit, we look for what attributes, in addition to money, that they're going to bring to this relationship, because we don't want to have a bad relationship. We look to have long-term relationships with all of our clients and make sure they flourish and grow. So we want to just pick your partner wisely. That's pretty common sense, but we do look for that. I wanted to just briefly touch upon the actual running of the capital raise process. So we've already discussed it's going to take 18 weeks, maybe 3 to 4 months. We're going to evaluate which type of capital we're looking for, whether it be equity, debt, or maybe a hybrid between equity and debt. We've talked about what types of people would be ideal. Now we want to talk about your actual running of the process. I encourage people, when I talking here about process decision factors, I encourage people to hire a professional capital raiser. It can be somebody that's internal to your company, at least for that period of time that you're raising the capital, or it can be an external person or group like myself and my firm. And it can also be other people that could be your law firm. But what you want to do, you don't want to get some outside help, because unless you do this on a daily basis, you're really not going to know exactly what to do unless you've been working in the investment banking or private equity or venture capital industry for a number of years. the typical investment banking contract terms, so there is a price to our service, is 7% cash plus 7% at the market warrants, and then a small cash or equity work fee. So if we have small clients that don't have the budget to pay a cash work fee, we can take a small slug of fully vested stock in lieu of a cash work fee to make it easier for the company to engage with us. And I think, not every investment bank will do that, but we're pretty entrepreneurial about that. I wanted to just point out crucial contract negotiating points. And again, every contract is tailored to the needs of the client, but it is either going to be an exclusive or a non-exclusive contract. It's either going to have a work fee or not have a work fee. And it's going to be, there should be some, if it's a company sale or a capital raise, there should be some type of agreement between the company and the investment bank that there will either be compensation or not be compensation if the company brings in the investor or the lender. So it really is negotiated one-on-one between the client and the investment bank. But those are issues you want to make sure your lawyer helps you on and your investment bank is fair on. And then you also want to have a clear agreement on what the process is going to be and the timeline. So I've kind of given you that, but sometimes you hire somebody and you hope for the best and you don't have a great strategy articulated on how you're going to run the process or how he's going to run the process. And then you have buyer's remorse because I get people all the time saying, listen, I hired an investment bank 4 years ago. I paid him 15 grand and nothing happened. Well, you know what? I'm very sad when I hear that, but the truth of the matter is, it's a team effort between the client and the service provider, you want to make sure there's a strong bond and that they're working together in the process. And you're not just hoping for the best and letting him run around trying to market your company. The scope of the engagement, there can be as simple as a rifle shot outreach, which costs the lowest amount of dollars and has the lowest probability of success, versus a comprehensive and coordinated process. So without going into too much detail, you get what you pay for. If you're trying to get somebody to work with you without a success fee and without exclusivity, they are going to reach out to their top 10 or 20 go-to guys and see whether or not they can find an easy match, but they may not be doing a comprehensive service. And so they might be missing some of the bigger strategics or some of the better educated private equity or venture capital investors that they should have been reaching out to because you reduced the scope of the work. So that's something you got to decide together with your investment bank or your business broker or even your lawyer. And then I will point out some caveats very briefly. Some very early stage seed VCs don't want to talk to investment bankers. So if you have a seed stage software company, it might be good for you to certainly get money from friends and family, maybe research who are the most active venture capitalists in your industry and start to try to talk to them directly rather than using an investment bank for that process. Because, I want to be fair to you guys. If the early seed stage VCs don't want to talk to most investment bankers, then I don't want to be put in a position where you say, why didn't you bring me to this guy? And it's because it's his philosophy not to use an intermediary. The second advice is make sure you use proper research tools and that you get warm, receptive introductions. You doing a cold call is to a venture fund is probably a very low probability of success. My calls to a VC are not cold calls. If they don't like the deal, they're not going to call me back anyway. But at least they know the deal has come through a reputable investment bank, and they should at least take a cursory look at it. So you want to have the proper research tools and the proper introductions. And you might strategize with your investment banker to say, listen, I want to handle these 5 introductions because I have a warm, receptive contact through my board, through my law firm, through the Miami-Dade Chamber of Commerce, It could be whatever reason you should be strategizing with your investment bank to make sure that each introduction is at the right level and is with the right level of probability of success. I will also say, please use a SEC and FINRA registered broker dealer. Non-registered finders and consultants will cause future legal problems for your company. And so your lawyer can give you the advice on that. But the bottom line is, if an investor puts in money, you pay a finder or a business broker who's not licensed, and then the investor loses his money, he's going to be able to sue you and try to get the money back. Whereas if you do it through a broker dealer, there's no right of rescission, which means you don't have to give the money back. So that is, there's other reasons why, but that's a major factor that I want to point out to everybody. And then I've already said it once, but run a well-managed process, adhere to a tight timeline. So, because herding cats is no fun and does not end well. So that is that topic. Picking the right investors. Matt, did you have a question?
Oh, Peter. Yeah, because that was a big deal right there. You say that if you're selling companies or selling your company, you want to make sure you have a really good lawyer in play to be there and walk with you through the way, because someone may be able to bring more legal challenges that can lose your hard-earned company. So that's a big deal. Any other guidance on identifying a good lawyer or someone?
Sure.
Your company is a very good resource for this, big time. Well, what other guidance would you give on making sure we have the right team of people to help us in this process if we do decide to sell our company?
Right, that's a great question, and I would recommend that the Miami-Dade Chamber sends out a list of all lawyers who are members to all the chamber members, so we know who our fellow chamber members are in the legal profession, because everybody should be working closely with their lawyer on this type of transaction. You don't really want them to be billing you a lot for this, but you want them to be knowledgeable that a transaction is being pursued, and then you want them to be showed to you that they have the relevant expertise in this space to guide you through the whole process. So if you have a HR lawyer, he or she is not going to necessarily have the proper legal acumen to guide you through a capital raise or a company sale. So he or she may have somebody else in their firm that's the expert in that type of corporate finance transaction. So you want to make sure you are comfortable with both your primary lawyer, who's going to help you with the NDAs and stuff, as well as somebody who's going to help you with the contract negotiations and drafting of purchase and sale agreements. So that's the primary service provider that gets involved, other than an investment banker, but also a graphic artist that can make your deck look beautiful. I have a lot of very good clients who give me very mediocre decks. And if they just spent, and we can help improve the deck to a certain extent, and we oftentimes will outsource to a graphics person and say, please make this deck more beautiful. But if you don't spend a little bit of money, either with us or with a graphics person, to make the deck look beautiful, then you're doing yourself a disservice, because you're not putting yourself in the most beautiful format when you're going out to market. So I think those are the major categories of service providers that you engage with. The next topic is picking the right investor. We did talk about this a little bit earlier, but you want to find people who are going to help you build your company, not people who want to invest in your company. Because, money is one thing and it gives you a certain solution, but the actual growth of your company is the most important thing that will make your investor happy and increase your personal net worth. So try to find investors that you believe are going to help you build your business, not just investors that want to put money into your business. Don't ignore international investors. This is a small world right now. You can reach out on Zoom to somebody in Yugoslavia just as quickly as you can reach out to somebody in Coral Gables. So, you know, if somebody's a big player in your industry and they're not in the United States, doesn't mean you shouldn't try to reach out to them or have your investment banker reach out to them. And they might pay more because they want to have a US presence. That's a very common thing. You got a European middle market company or large company, and they don't have a strong US presence. Why would they buy your company or invest in your company? To get a foothold in the United States and then rely upon you and your team to grow that business throughout the United States with an expanded team. So you get the excitement of getting the opportunity to help a large international company grow in the United States. So that's, we always love to get international investors involved in our transactions because they add a better mix and they have more diversity and they can bring, and they will be more reliant upon you than somebody who's already in the US and may just want to buy your company and not have you integrally involved with it. If you want to get out of the company, that doesn't matter, but you want to have as many diverse opportunities to sell your company or raise money for your company as possible. So international investors are getting more and more involved in that process. So I think that was a good review of that slide. You know, this is kind of a time sensitive slide. Some industries are doing terrible due to COVID. Other industries are doing good or great due to COVID. So investors are primarily looking for companies that are doing good to great due to COVID. But if you're in one of those industries which is not doing well due to COVID, then you're going to be viewed as a distressed sale or a distressed investment opportunity. And that's the harsh reality. But the good news is there's plenty of distressed investors out there, but there are plenty of people who want to invest in your company if it's shown it's been able to weather the adverse effects of COVID efficiently, and then it will be poised for a rapid growth after things normalize. The other point is, you know, there are SBA loan programs out there, which I'm sure most of you have tried to access. It's been a mixed experience for all of us. I'm just going to open my window because it's a little hot here. But making sure you work with your local commercial bank to work through the nuances of the PPP program. I heard yesterday they might open up another PPP program. There's the EIDL loan program, and then there's the Main Street lending program. So those are all lending programs that the SBA is running that would help you to keep your business afloat and help you to expand your capital. So let me just go over the next topic very briefly, which is what are Series A investors looking for and who are they? And what are the factors involved with the process currently? Because the process currently is different than the process that we've run in prior years. In prior years, everybody wanted to meet you, everybody wanted to tour your facilities, everybody wanted to kick the tires and get to feel how comfortable they would be working with you on a regular basis. Currently, it's a lot of Zoom calls and very few face-to-face meetings. So all the more reason why you have to have a very good web presence, you have to have a very good Zoom presence, and you have to have good presentation materials. You should expect that the runway to raising capital is going to be longer. And then once you get that capital, you want to save that capital and use it as judiciously as possible, because we don't know how long this COVID recovery is going to take. Be very good at Zoom pitching. So, you know, I sit with people on a Zoom call. Some people are chewing gum. So some people haven't brushed their hair. Some people haven't shaven. Some people have strange backgrounds behind them. You can do whatever you want, but if you want to be successful and you want to be viewed as being successful, you know, make a professional appearance on a Zoom call and don't do anything that's really going to cause negative attention to yourself. Flat is the new up, so people are not expecting exponential revenue growth right now. They just want to see, are you able to maintain your customer relationships and continue generating revenue, at least on a fairly flat basis. So that is there are a lot of factors here relating to what Series A investors are looking for. But that's a brief overview on the process. I think this slide is a great slide to understand more closely. So Eric could email you this deck if you have interest. But that's the points I wanted to make, at least preliminarily on this call, and then maybe answer some questions if people have questions.
All right. Thank you, Pete. We actually do have a few questions, one on Facebook and also on a Zoom. So for those that have not joined, feel free to click the link. I'm going to join in the Zoom. So ask these questions. You provide a lot of good information. I'm going to have a few questions myself. But first, Bob asks, what is your sweet spot size deal? And what is your bottom and top level for
Right.
your company?
That's a good question. So we most small investment banks mainly focus on company sales, and we are very good at running a company sale, but we have prided ourselves on focusing primarily on capital raises. Capital raising is much harder than a company sale. With respect to capital raises, we recommend to our clients that you at least try to go out and raise $1.5 million to $2 million at a minimum. If you're only trying to raise $500,000 or $750,000, you're not going to get many investment banks interested in helping you on that, and you're going to reduce the amount of investors that are willing to look at that deal, because the seed stage venture funds are the only ones that want to write $250,000 to $1 million check. And as I said, they're not that friendly to investment bankers. They're not that friendly to CEOs. They're really kind of scouting around in the stealth mode, trying to pick up investments. So we start at, let's say, $1.5 to $2 million. Our typical transaction size is about $10 million, and then we start to lose to our competition at about $25 to $50 million of capital raise, because the big firms can promise the world and hopefully deliver. So that's kind of an overview of what we focus on.
All right. So I love your slide that broke down the different industries that are in distress right now and those that are actually thriving during COVID, the high performing industries, and that are actually in alignment with what we see down here at the Miami-Dade Chamber, because we have quite a few businesses, and a lot of our maintenance businesses have been thriving very well during this time, and senior care and those things. So that's pretty on point. One of the questions we have on Facebook, they say, if you're in a distressed industry, can you just seek an asset sale just to get out?
Sure. That people love to buy assets. They would rather buy assets than buy your stock. So it's definitely the easiest route to finding a graceful landing, a soft landing to the end of your business career with that company. So that's very common. There's 3 different normal transactions on an asset sale that the lawyers employ. One would be what's called a Section 363 sale. The second one is called an Article 9 sale, and the third would be a Chapter 11 bankruptcy sale. So the lawyers are definitely involved in that process, but we can help broker the transaction and make sure you get the best buyer for your assets.
And that was actually the follow-up question. It was, is it better just to seek a commercial business broker for an asset dump?
Listen, you got to feel good about your service provider. And so, I would interview multiple service providers before you decide who you're going to use to sell your assets. But yeah, if you have somebody that's an expert in selling assets in your industry, that's the person you should use.
Got it. Got it. Got it. All right. So, if you have any questions, feel free to put it in the chat, in the Q&A, or on Facebook. We are here. One of the things that you mentioned during your presentation that I see quite a bit is the Zoom presentation. And I'm glad you touched on that, because there's a new decorum to being professional on Zoom that I don't know if too many people really gotten, and how much of an impact that has. And I love you broke it down very simple. Just be professional on Zoom. So make sure your hair is cut, make sure you're dressed, make sure your background is good. Have you seen that negatively impact people in the past?
I think there's a subliminal messaging that occurs if if you look a little too ragged, then people are going to think you're running your business in a ragged professional way. So I haven't had any personal experience to validate the fact that I lost a deal because a guy didn't look good on Zoom, but I do know that when people chew gum on Zoom, it makes me focus not on what he's saying, but what he's doing. So we don't want that to happen.
And another one, you talked about flat is a new up. And I know you kind of just quickly glossed over that. But that's a big deal to hear that investors at the time aren't just looking for profitable businesses, but during this pandemic, when a lot of businesses are taking a major hit, if you're stable, that's a big deal, because
Big
it
deal.
shows that level of customer satisfaction, and what's the word? I'm missing the word. Customer. It's not coming to me right now.
Yeah,
But
retention.
commitment, yeah, retention. There you go. And yeah, speak a little more on that part.
Sure. Yeah, any investor or lender or acquirer is going to analyze the purchasing behavior of your customers and analyze it over not just this past year, but over the past few years. If you can show to them that there's been very little percentage decline in your top 10 customers through COVID, it's really going to strengthen the price they will pay for your business if you're selling your business, or the value they will invest at if you're taking an investment into your business, because it's going to show that you've weathered the bad times, and then as things get better, those customers will theoretically be there, and you'll get more of them, and you'll also get more revenue out of those customers.
Awesome. So one of the last questions we have, and we're going to wrap up. We don't have more questions, but we have Gloria, one of our members, asked about the steps to make an appraiser market your business, and how do you, I guess, prepare for someone to appraise your business, the market value of your business, and how do you even know, as a small business owner, what is the market value of your business?
Yeah, so I am a CPA as well, and I've done a lot of valuation work, and so we have that expertise internally. But there's plenty of great appraisal firms in Miami and or across the United States. The appraisal process is pretty standard from one company to the next. You're going to look at publicly traded comparables as one section of your appraisal analysis. The second would be recent completed transactions in your industry. And the third would be a net present value of future cash flows of your financial projections. And you average the three of those and come up with an appraisal range that that everybody agrees to before we distribute the appraisal out to anybody else. But that's a pretty simple process. You can do it internally with a good CFO or controller or CPA firm that puts together numbers for you. You don't have to spend a lot of money on an appraisal right out of the gate. You can basically get some industry metrics and I can help everybody with that. I'm happy to give free information out to all the other members. I'm a big believer. I want to give value without any expectation of getting value so that I can continue to get new clients over time. But we can give you some examples of what an appraisal looks like for an investment banking transaction. And we're happy to share that with the community as just a free email to everybody. I have a sample that I send around. And basically you want to use data that is defensible and that the other side, the recipient of the data, is going to feel good that you use the industry standard methodology and process, and people will then accept that valuation as being a valid valuation.
I got a few questions. One of them, you're gonna have to see if you can. Is which percentage of success you have? That's from Mark. But which percentage of success?
Sure. So I would stratify that by saying if the company has under 2 million of revenue, it has the lowest probability of getting a successfully completed transaction. We still work on a lot of those, but the probability of success on those, call it pre-revenue's got the lowest probability of success. I would say that's probably a 15 to 20% success rate. Unless it's got great patents and it's got some customers that are, free to pay on a free to paid path. 0 to 2 million, it's got probably a 30 to 40% probability of getting a successful transaction. Over 2 million, the probability is probably 60 to 70%. And then if it's over 5 million of revenue, it's probably an 80, 90% probability you get a transaction. If the client is a willing seller and or a willing negotiator on mutually agreeable valuations.
Awesome. And what would be your ideal deal requirements to raise capital for an early market company? That's actually an excellent question.
Yeah. Again, we work for our clients, right? So we want clients that want to engage an investment banker and have decided that we're the one that is the best fit for them. And then once we're engaged, we want to do a great job for our clients. So we don't look for the ideal client. We have as we got bigger, we broke out into sector focused teams, and each team has expertise in their sector. So we have a very strong consumer retail team. We have a very strong tech media telecom team. We have a strong cannabis and hemp team. We have a strong engineering, industrials, chemicals, and manufacturing team. We do a lot of work in Latin America. We do work in financial services and fintech. So we pretty much cover all of the major economic sectors. What we want to do is look for clients that really want and need our help and have a viable business offering of either company sale or capital raise so that we can increase the probability of a successful outcome for our client.
Okay. All right. Last question was from Tracy. I want another one from Mark. How much is your initial fee range?
So if it's a very small client, and I know Miami-Dade has a variety of clients, but the smaller clients, let's call it 2 million of revenue, we take a risk if we work on that and we don't, we're not successful. And so we typically will charge about $7,500 a month, maybe $5,000 a month for 3 months or 4 months to induce us to focus on that project. We can take, as I said earlier, we could take equity in lieu of cash if there's not much cash in the budget but we don't work on pre-revenue or very small revenue companies without some type of monthly work fee. And that is very common. I don't think there's many investment banks that work on those kind of deals without some type of skin in the game by the client.
Okay. All right. So the question, there was a follow-up question about, is that investment and sales in terms of, in terms of revenue?
It's sales revenue. So we basically want to see somebody that's got, on track to do 1 million or 2 million of revenue, ideally, before we get excited about working on it. We do work on pre-revenue tech startups, and we do work on pre-revenue life sciences and healthcare deals. We have 2 doctors on our life sciences and healthcare team. So that's those are the industries we work on that don't have revenue.
Okay, and another question is, are those percentages the same for capital investment and for the sale of the business?
Yeah, so if we're raising, upwards of $10 million, it's a standard 7%, whether it be a capital raise or a company sale. If it's a bigger transaction, 20, 30, 40, $50 million, we're going to take a lower percentage and we're going to negotiate that with the client to make sure they're happy and they feel it's a good situation. We can also put in where we get a higher amount if we get a higher valuation, we get a lower amount if there's a lower valuation. So we want to tailor the contract to the liking of the president or the CEO of our client.
Those are some excellent questions. We got those from Facebook from Miss Fakayodi. I believe I got that right. Hopefully I did. That was good. That was good. All right.
Well,
Eric, go ahead.
got a question. This is, I don't know, kind of off the wall. And I was just thinking, I worked for Wayne Heisinger for many years in working for the Miami Dolphins organization. And obviously he founded AutoNation. And obviously that was a conglomerate of car dealerships from across the country that he basically went out and bought up all of them and created AutoNation. Do you see any trends like that happening anytime soon?
Absolutely. That is one of the most common strategies that private equity funds employ is what's called a roll-up strategy, where you get a platform business, and the platform could be as low as 10 or 20 million of revenue, and then they try to add on similar companies either across the United States or in different countries to maximize the growth of the company. Very, very common strategy and very successful. So that's and Wayne's did a great job and is a pillar of the Florida entrepreneurship community.
Oh, absolutely. As I said, the only entrepreneur to take 3 companies to Fortune 500.
Awesome. So we're going to wrap up. We've answered all of our questions. Pretty engaging, very, very insightful conversation, Peter. Thank you for bringing this to the chamber and our members. Since we've been in COVID, there have been a lot of our business owners that have been talking about whether or not it's time for them to sell and bring in some capital and pivot into something else, their business. So this is a really good conversation, and that's good to hear. Any last words to our members, and you want to let them know how they can get in contact with you about your company and your services that you offer?
Yeah, no, I'm just a big fan of the Miami-Dade Chamber of Commerce. I want to try to help the chamber and all its members, and I'm really excited about being part of the process. And I 2 thumbs up to you guys. And I'm here. I've flashed my contact information throughout the presentation, so I'm sure people who are interested wrote that down. But it's peter@yacapital.com is the best way to reach me. And I'd love to or reach out to Eric or Matt and they'll connect us. And I'll send Matt and Eric the presentation. You can send that out directly to people. You don't need to copy me. And I'm just here to help if people need help.
Awesome. That is good to hear. And for all those that are here and online, I want to make sure that you know that the Miami-Dade Chamber of Commerce, we do offer one-on-one technical assistance to businesses in Miami-Dade County. That's part of what we do. So if you ever need help with business planning, or cash flow, or getting access to capital, that is what we do. Just go to our website, m-dcc.org. We also have a microloan program where we're giving access to capital to businesses at a 4% interest rate. We have 2 tiers of loan. As long as you're a business in Miami-Dade County, you can get up to $25,000. So if you go to our website, www.m-dcc.org, and look at our services, you'll find that information. And we're here as a chamber for you. And this is a platform that we do for our members. And for those that want to give insight and understanding to other members. That's why I strongly encourage everyone to get involved with your chambers. This is an organization and coalition of business owners that are coming together to empower each other. Peter is one of them who joined in and giving his insight and expertise. And we want to bring this organization to ensure that we have as many attorneys, accountants, maintenance, so that we can have a strong organization of business owners that are here helping each other to profit, one, because that's why we're in business, and expand our services to our community. So thank you for joining us today, and I'll turn it over to Eric to close us out.
Well, again, Peter, thank you so much. A lot of great information, and I'm sure we'll have you back again sometime in the near future. Matt, thanks for conducting this process today. Also, just want to let folks know that we as a chamber, we meet every Tuesday and Friday at 4 o'clock so that businesses can exchange information and connect to one another. I tell you, those Tuesdays and Friday meetups have been very great because members have had the opportunity to engage with one another and actually do business with one another. So I encourage you to join us on our Zooms on Tuesdays and Fridays at 4 o'clock. You can go to www.m-dcc.org and learn more information. And if you want to know more about the chamber, you can call us at 305-751-8648.
Awesome. All right. So as we close out, I did want to make one quick announcement. We will have another technical assistance workshop coming up October 1st. Thursday at 10 a.m. We will bring in our partners with Jackson Health and our small business members to talk about operating during COVID. We are going into phase 2 in Miami-Dade County in South Florida, and we want to make sure that our business owners have the latest information and resources to operate their business, bring their employees back. So make sure you sign up October 1st for our next technical assistance workshop. Thank you, everyone. Everyone have a great day. Thank you, Peter.
Thanks, Peter.
Thank you.
Take care.